Hamed, there was a recent short report written about your company. Tell us a little bit about that.
Sure. I mean, listen, based on our review, the report contains gross errors, omissions, factual inaccuracies. It's basically one of these short and distort type reports. So at this point in time, it's definitely not even worth dignifying it with a response in terms of rebutting it. But listen, we had enormous feedback from our shareholders, analysts, and investors, commenting on their support for the company and the fact that they see this report for what it is, a misleading report designed to, manipulate the market for the benefit of people who have short positions on the company. And to that end, the report does disclose that the writers do have a short position on the company and that their work is based on their opinions, not facts. They also note that they make no representation to the accuracy, timeliness, or completeness of their work. Their friends, investors, and clients could have substantial short positions that favor the fact that they would make money if there was a decline in the stock price in the event that their campaign to misinform works. So they're clearly acting in their best interests as a short seller and to the interest of their clients. In fact, Andrew McCreath, a well-known Canadian institutional investor and BNN Bloomberg commentator, even commented on air on BNN about Well yesterday and this short attack.
What is raining down today is the trading volume on a stock here in Canada that was a favorite last year. I think it was up fivefold last year, 500%. It's called Well Health. It's traded three and a half times its average daily volume based on a short report that came out of the United States today. The individual, who of course remains anonymous, but I know that he happens to be one of these report writers who gets paid to write reports, something that I don't understand why regulators don't look at hedge funds hiring people to write short reports. Of course, the hedge funds are going to get short before the report gets published. And I'm not going to opine on the report at this point in time. But bottom line is the stock's not down that much. It's only down about 3% today, but on heavy volume, Greg.
He actually noted that he's aware of the research company and the fact that they carry out these sorts of research projects as paid assignments for hedge funds that carry these massive short positions. It's really incredible if you think about it. Hedge funds anonymously paying third-party research writers to try and damage a listed company's reputation just for the sake of their own profits. Meanwhile, Well Management, including myself, has not sold a share while continuing to buy in at varying price points, including the latest subscription receipts financing at $9.80 per share. So I've personally purchased millions of dollars of stock with my personal funds and recently purchased $530,000 at $9.80. So I think it's important for people to consider, the people most closest to the business that are insiders that are seeing the quality of decision-making and the quality of the business are the ones that are supporting the business and are investing in the business. And in our view, the regulators should require the short report author to provide their name and credentials. The firm that puts out the short report should disclose who paid them to write the report and whether or not the group paying the researcher is long or short on the stock. And it's a real crime what hedge funds and short sellers have been able to get away with here without regulators stepping in.